Hello and welcome to Steps to Investing on YouTube. Today we're talking about investment companies. Before we get to that, please remember to like and subscribe to the channel. If you subscribe, you'll get an alert every time we upload new content so you can stay up to date. So, investment companies. Well, joining me in the studio today is Emily Delacour. Emily, welcome to the programme.
Thanks.
Now, you work for the Association of Investment Companies, the AIC. Perhaps if I could just ask you to start by introducing yourself and tell us a little bit about the AIC.
Sure. Well, hello. My name's Emily, and as you say, I'm the Communications Manager at the Association of Investment Companies. The AIC is the trade association for investment companies, or as they're more commonly known, investment trusts. And just to explain, for anyone that doesn't know what investment trusts are, they are investment funds, but with a number of distinct characteristics. They're actually PLC companies in their own right, hence the name investment companies. And so they have shares which are traded on stock exchanges. And what's crucial is they have what's called a closed-ended structure. Now that sounds a little bit jargony, but what that really means is they have a fixed number of shares in issue at any one point, and investors buy and sell those shares of other investors. And that differs to other types of fund which will expand or contract depending on demand.
Okay, let's go back to the association in a second and what you do. I wanted to just explore that a little bit, because why is it important? What's this difference between closed and open-ended, this kind of fixed structure and an open structure?
An open-ended structure means that when investors want to invest in the fund, they will bring money to the fund manager, which they will then have to invest. Yeah. And the manager will largely speaking, have to invest that money whether they want to or not. The markets could be doing very well, prices could be very expensive, and they'll still have to stick money in with what could be pretty near the top. At the same time, if sentiment is poor and people wanting to redeem, they could be doing that at times of market stress when actually prices are very, very cheap. So we tend to get into what we see as a sort of habit of buy high and sell low. Whereas investment companies don't have such a problem, because if you want to sell your shares, you sell them to another investor in the market. Similarly, if you want to invest, you buy a share of someone else in the market. It happens all completely separately from the actual portfolio of assets which the fund manager is managing. So actually, it sort of removes the emotion of actually investing at the top and potentially selling at the bottom. That's only something the manager actually has to decide when he or she wants to do.
Okay. So let's come back to the AIC then. So your job at the AIC is communications manager. Can you tell us a bit about what the AIC does and why it exists and what you do there?
Sure. So as the trade body, the work at the AIC is really to help investment companies in their work to produce the best possible returns for their investors, people like you and me. And that takes a number of forms. We have a public affairs team who lobbies government and regulators, just like many trade associations would, I would expect, for positive and beneficial sort of tax and regulation environments. We have a technical team that makes sure that as listed companies, these investment companies are able to comply with any changes in regulation. The communications team, the team I'm in, we work to promote investment companies as much as possible, to retail investors, to the media, financial advisors. We run an education program where we go around the country training financial advisors in the ins and outs of investment companies and what makes them different, their advantages, so that they feel more comfortable in recommending investment companies to their clients. And obviously, as a trade association, we also hold a lot of data on all of the investment companies. So that's something we publish on our website. Our web team works very, very hard to make sure that's all updated daily. So it's a huge resource of information for investors and also people that are new to investing.
I was going to ask you about the website, actually, because that's one of the sort of key ways that an investor might access the Association of Investment Companies, AIC. What's on the website apart from data?
We appreciate that investing in financial services can be tough to get into. There's a lot of terminology, lots of jargon when done badly. So we have a lot of guides aimed at complete beginners on what investment companies are. And then it gets more specific if that's what you're wanting. So, for example, how you might be able to use investment companies for income or growth or saving for children, so whatever you want, there's a guide for it. Also, there's glossary videos animated in a fun sort of cartoony style to explain the key concepts and terminologies in investment companies, because there is a bit of technical language there. I think it's something actually that we're very good at, that whenever there's a technical term on the website, there's a link to its explanation in the glossary. So we always try to take that step further to actually explain what what these concepts actually mean. And also there's just lots of interesting articles, videos, newsletters to try and sort of bring what investment companies do to life as much as possible.
Okay, so let's put ourselves in the shoes perhaps of someone who is new to investing, and they are considering investment trusts as an investment. What kind of information should they be looking for when they look at an investment trust?
I think assuming that you've sort of got to grips with the basics and you've read the guides and you've got an idea of what investment companies are and how they work, watch some of those glossary videos like I suggested. Firstly, there's a really good area of our website called Choosing a Platform, which explains the costs of holding and sort of investing in investment companies on a whole range of different platforms. Because normally speaking now, as an investor, you will have to choose a platform to actually buy and sell your investments. So before you even decide what you're going to invest, you'll need to choose how to do that. So choosing a platform is a really, really good part of our website. And then once you actually get down to deciding what kind of investment company you might want to invest in, I think crucially you need to ask yourself, what are your goals from investing really? Are you looking for income perhaps if you're retired, or perhaps to supplement your income in earlier years? Are you looking to build wealth over the long term and really go for growth? And I think before you've answered that, well, you have to answer that before you can really take the next step. What's your time horizon? Preferably you'd have 5 years as a minimum, and that's we really, really want more ideally. So after you've answered those kind of questions, I think it's a question of the kind of sector you'd like to invest in. So if you look at the section called Find and Compare Investment Companies on our website, it lists all the different sectors, and that could be from...
Sorry to interrupt, so a sector is just like a grouping?
Precisely, yes. So sectors group different investment companies into sectors depending on their characteristics and what they aim to achieve.
Okay.
And that could be very general, from companies in the global sector that invest in shares of companies around the world, or it could be those that just invest in the UK, or something very specific like Japanese smaller companies or something.
I see. Okay. Sorry, I interrupted you. You were saying so once you've thought about your time horizon and your goal, you would then perhaps look at individual sectors.
Exactly. Yes. So do I want something quite general that will help me access the best opportunities wherever they are in the world, or do I feel more comfortable investing in my own home country, which could be the UK, or it could be America, or depending on when you're accessing the website. Once you've sort of got past that, the things to look at are investment companies trade at what's called discounts and premiums.
I thought you were going to mention this.
Yeah. So because investment companies are listed PLC companies in their own right, you invest in them by buying a share in them, just like you would buy a share in any other big blue chip company.
Yeah.
And the price you pay for that share will differ from actually the bit of the portfolio that you are actually owning with that share. And if it trades above the value of that portfolio, it's called trading at a premium. And if it trades below, it's called trading at a discount. It's very much like going into the supermarket and seeing something that's either been reduced or has actually gone up in price.
Right.
So some companies can quite consistently trade at premiums, some can trade at discounts, and there's a page for every investment company, every member investment company on our website, which shows not just what the discount or premium is, but this is the real crucial thing, what that discount or premium has done historically.
Over time.
Over time. So it'll help you say, is this looking sort of a bit expensive at the moment, or actually is this pretty normal? So over the long term, it's a sort of small-ish point, but still it's something that I think it's good to look at.
Should be considered. What just struck me then is you were talking about the different sectors and the geographies and such. It sounds like there's a lot. How many investment companies are there?
So there's an industry of about 400, of
Right.
which we have just over 350 members. So there are a lot. On the one hand, you could say that's very, very complicated. But on the other, you could say, actually, if you can nail what it is you want to achieve, there's an investment company for it.
Yes, and you presumably can whittle that list of 400 down to something more manageable by concentrating on those questions.
Absolutely, yeah. And if you click on the sectors, you'll see, there's probably about 35 sectors all in all. And if you're a beginner, you could quite quickly sort of whittle out those that might not be for you, and those that are, words like sort of global or UK or things like that. That also think, oh yeah, that's probably something I might be interested in. But it really depends. If you're wanting something quite specific, there's definitely that too.
Okay. I mean, that is one of the points to note, isn't it, about investment companies, that they tend to be split into what we might call alternative assets and more mainstream assets. In other words, things that tend to be, perhaps, for example, UK or US focused, that invest mainly in other listed companies. But there's a whole swathe of alternative different investment types. Can you give us an example of perhaps a couple of those? Yeah,
definitely. So we've seen a real explosion in investment companies investing in alternative assets over the last 5 and 10 years. The closed-ended structure that we talked about makes investment companies extremely well suited to investing in alternative assets, because alternative assets are things like, well, the clue's in the name, alternative to shares in other companies. And this could be physical property, bricks and mortar. It could be infrastructure projects, investing in, sort of bridges or, sewage treatment plants. It could be private equity, companies that haven't quite yet listed. Renewable energy, when you drive down the motorway and you see wind farms turning. These are all sorts of things that investment companies can hold. And broadly speaking, they're good at generating income. So in the last 10 years, when interest rates have been very, very low, lots of investors have been hungry for income from their investments. And this is something where investment companies really do come into their own, being able to hold these assets for the long term without having to worry about having to sell them.
I was going to say, that's the point, isn't it, about the closed-ended structure, which is that it allows you to take a longer-term view. You're not worried about inflows and outflows, which means that you can buy things that are less readily sellable. I mean, a share on a stock exchange, you can sell in an instant. A wind farm
takes time.
Much harder to sell.
Yeah.
That's the benefit of that structure.
Yeah, absolutely. And I think that's why we've seen so many launching over the last 5 to 10 years.
Okay, so I want to move it on a little bit. You talked earlier about the difficulty sometimes when you're starting out of investing, is that there is lots of jargon out there. Obviously, we're doing our respective bits to try and help with that. What do you think the management industry, the fund management industry, could do more to help make information more accessible?
I think it's a mindset. I think there's a tendency to explain something one way when you're talking to a friend or your mum or something, and you make it very, very simple and in ways that you can understand. And then you arrive at work and you make it very complicated. And I think that actually the situation would improve a lot more if those were much more the same. Use the language and the style that you would want to be communicated with. And actually, and sort of things like acronyms and jargon, unless you're pretty knowledgeable and actually have had lots of experience in the sector, they don't really mean anything. So all you are is distancing people from investing in your fund or from feeling confident in their investments. So I think if you're explaining it differently to your mum than you are sort of to potential investors, broadly speaking, I think that's something that you should be looking at. And also, it isn't easy. It doesn't just happen. The way you type something might not be the best way to actually explain it. So it does take a thought process. And it might not be a page of text is the best way to do it. It might be some graphics or a video or something. Yeah. So I think actually it's about a mindset. Do we want to communicate this in the best way? Do we want to find out what that is? And I think it takes a bit of bravery too, because sometimes you can kind of protect yourself with the technical terminology, but sort of having the bravery to sort of strip that back and say this is what it really means. I think you get that back when you see people really getting what you mean.
Okay, so final question. In your view, what information do first-time investors, somebody who hasn't invested before, what are the kind of critical bits of information that you need before you can make your first investment decision? I
think, crucially, you really need to think about your goal. So, what do I want to get from my investments? And that could be income, as we've talked about. If you're retired, perhaps, or if you wanted to sort of boost your income earlier in life. Are you going for growth? Are you putting a bit of money away every month so that when your children go to university, they'll have something to pay fees, or first deposit for a house? So I think understanding that answer will help guide some of your decisions. I think the second big point is your time horizon. So the longer you can be invested, the better chance you give yourself of recovering from any setbacks, and also capturing the really, really good years. So I think the longer you can be invested, the better. You'll have to choose a platform as well. That's an area that the AIC website, which is very, very helpful, because if you're paying fees, higher fees where you could be paying lower fees somewhere else, it's not always about fees. You need to pick the platform that's right for your style, right for the size of your investment portfolio, and also how regularly you trade. Because because any money you spend in fees, the harder your portfolio will have to make to work that back. So I think that's definitely something to think about. But also, don't be scared of actually asking for advice. There's websites where you can find a financial advisor and speak to people sort of easily. So so don't be scared to take the first step.
That's great advice. Thank you for your time, and thanks for explaining about investment companies.
Thank you.
And thank you very much for watching. Don't forget, you can head over to stepstoinvesting.com. All of our explainer content, our jargon busters and tools are on the website. And of course, please do like and comment. We really do value your comments on these programs. It helps us form the series of programs that we produce. Well, that's it. Thank you very much. Goodbye.